All right, guys, you know what time it is. It is Monday. It is 12:30 local time here, and it is another edition of YouTube Live, Everything Phoenix, right? Where we're discussing just that, right? The title of the show says it all, Everything Phoenix. But primarily, we always stick to housing market issues. Okay. Housing market issues and development and what's going on in the local economy and even the national economy. You need to know kind of the macro before you can dive into the micro to make it all make more sense. But the whole point of this, guys, is information, unbiased information that you probably aren't going to find if you turn on your local or even national, especially media channel, right? But if you come here, this is the new right? To get your news and get everything you need to know about Phoenix, making informed decisions on the housing market and everything else that comes with it. So we are going to dive in today. So it's this big announcement that happened last week. Not sure if you heard about it, but something to do with the Federal Reserve mortgage rates. I'm not sure if you heard anything about this. Yeah. Okay. Interest rates and primarily the federal fund rate, the overnight borrowing rate between banks that the Federal Reserve does control, because remember, they don't control 30-year fixed mortgages. They don't control the mortgage rates. That works off the 10-year treasury note, right? So, but it has an indirect effect because it affects the market. It affects how banks borrow, what they charge on the overnight borrowing rate amongst each other and big institutions, et cetera, et cetera. So, this is important to talk about and it's noteworthy. So, last week, the Fed came out, Jerome Powell, the chair, and he did announce a 50 basis point cut, which for most people was more than what they anticipated. Now, I was one of them. I miss a lot of things, but I called this correct. I said it's going to happen. 50 basis points will be the benchmark that they will set because I think they believe they are a little late to the party because they should have reduced 25 basis points last time they met, and they didn't. They kept it the same. Also, too, there's election coming up, and this election has, I think, a lot to do with it as well. The Federal Reserve obviously is a neutral party that's not supposed to be politically motivated at all, but a lot of people say they may or may not be. That's for you to decide. That's besides the point of today's show. Nonetheless, 50 basis points was the reduction, and here we are today. So what does that mean for local economy here in Phoenix? What does it mean for the local housing market here in Phoenix? We're going to dive right into that right now and see where we're at, because now that the Federal Reserve dropped the rates, we're all good, right? We're set, easy, smooth selling from here, right? Not exactly just quite yet. Okay. And here's what we're talking about. Now, let's jump into a few things. I'm going to share my screen and we're going to talk about the effects of the housing market here locally in Phoenix based upon the Federal Reserve's actions of reducing the federal funds rate for the first time, by the way, since 2020 when COVID first hit in March there. All right. So share my screen and we're going to jump into the Cronf report, which has a little bit of commentary on this as well. Okay. So here's what it says. All right. The average change in the Crawford Market Index, the CMI, over the past month is negative 1.3%. Last week, we saw negative 0.7%. The average would be much lower if it were not for Paradise Valley, which is up very sharply over the last month. Why? What is PV? PV is luxury. Now, here's the chart right here, 142. It's up 25% of the CMI month over month, guys, 25%. What does that mean, guys? That means that now that summer's over, there's a lot of people with money that are looking towards the Phoenix area, even though I'll be honest with you, it's September and it's still a little toasty outside. Last week was pretty awesome. It got down in the 80s for a high, but that was a little tease because we're back up in the hundreds here this week. So we're not out of the woods with the heat quite yet here in the desert, but it's right around the corner. So luxury home buyers are coming out with the woodworks now. That's what this is showing. Okay, Fountain Hills is also showing a respectable percentage gain of 10%, which also has a higher price point based on the averages in the valley. Okay, you can see right here that Fountain Hills comes in number 4 for the highest average annual price per square foot, $396 a foot. Okay, so it's interesting. Now, while the Federal Reserve, talking about interest rates here, we're going to jump around here, didn't hold back and knocked 50 basis points off their benchmark interest rate last week. Judging by the fact that you cannot get into the website, Mortgage News Daily, which is what we love to use, this sparked a lot of interest in what the action might do to mortgage rates, guys. But surprise, surprise, they actually went down, not down, up. That's what it says. Up. Everyone anticipated to go down and fall off a cliff, and it's all hunky dory. And affordability rates are back in action, and now you can get a house for much cheaper. But that's not what happened. In fact, what happened is that rates were actually declining for about the 2 or 3 months prior to the Fed's announcement, and they were already built or baked into the rates. Now, rates right now are about 6.2%, according to our lovely site of Mortgage News Daily. The 30-year fix sits at 6.2%. And you can see the zigzag here that they were down to about 6.14, and then they're back up to 6.2. So they've actually increased to the Cromford reports commentary. Okay. This is because mortgage rates are not based on the federal funds rate, but tend to be controlled by the 10-year Treasury bond yield. Mortgage rates had already fallen in anticipation of the Fed announcing the cut, and Powell's comments were seen as less optimistic than what they had been. It's expected. The comments matter based upon what they say. Is it any wonder that people are notoriously wrong when they attempt to forecast interest rates? The rate cut did affect the dollar, as you would expect, which dropped against most foreign currencies, as it is now less attractive to hold U.S. dollars. This makes homes in Arizona a little cheaper for foreign buyers. Can we say Canada? Okay, guys. So if you're in Canada, this is an opportunity for you, right? Because now your dollar got stronger against the par rate against the US dollar. Every nation's foreign currencies did with this rate cut. So, guys, there's pros and cons to everything. There's pros and cons to everything. But the main thing is, in my opinion, we need to get inflation under control. Now, inflation being at 2.5% on the CPI seems to be somewhat under control. But does it feel like it? Comment below if it feels like inflation is under control. Are your groceries cheaper, or are they still fairly expensive? Does it cost now 25, 30% more when you go out to eat at a restaurant for your family of 4? Does it cost 25, 30% more than what it did 2 years ago, 3 years ago? It feels like it to me. The bill feels a lot more expensive. Everything is going up. Auto insurance. Oh my goodness. Home insurance. It's crazy what has happened there. Why? Because when they replace things, the cost of replacement for all the windows and the carpet and the paint and everything has all gone up. And will it settle back down? I don't know. So I'm not sure what exactly. I mean, I can tell you the definition of what the CPI reports on when they report the inflation reading for that month. But I tell you what, it doesn't feel to the average person like we're out of the woods quite yet when it comes to inflation, because prices are still extremely high in comparison where they've been the last 2 or 3 or 4 years. Okay. So now let's go back to my screen and let's see what else we can derive from this. All right. So here's what's interesting. September 17th, we're now seeing definite signs of small improvement in demand, no doubt influenced by the lower prevailing mortgage rates, because they were already coming down prior to the Fed's announcement, right? The number of listings under contract is up 2.5% compared to a year ago. That's good. That's really good. The last time we saw a year-over-year increase was back in January, when it was only a mere 2%. Okay? Only a mere 2%. We have to go all the way back to February 22 for the previous example. All right? They were also up 4.7% over the last month. This is not huge, but it is a sign that transaction volumes are no longer getting worse. This is good too. Okay? This is good too. Before sellers got too excited, it should be pointed out that the active listings are also rising. So it would seem, this is supply, guys, that many of these extra buyers are also sellers. It's unlocking inventory when you have the rates come down. This means it is a move-up sector, the move-up sector, that is showing signs of life. Because of this, the Cromford Market Index is still going down. The good news for real estate agents is that these small changes portend larger numbers of transactions going forward. Okay. As interest rates fall, this little trend should, in theory, get stronger. So where are we at in the CMI, Cromford Market Index? Okay. We are right. Jumping around here, guys. Sorry about that. We're going to go right here and go to home to show you this. We are right here, guys. The Cromford Market Index is loading for us right here. And we are at 95.8, guys. We are going down because why? Supply went up. Demand got better. Supply got worse, I guess, because the people who are buying are also needing to sell, or maybe they're more on the influence side and they have the ability to buy before they sell, but they're still purchasing. Demand's up, then putting their house on the market. So it's interesting to see when you dissect all of this, how this all is playing out. Okay. Now, I want to show you some active inventory when it comes to the weekly listing counts. You can see right here that what we just said on the supply side, it is happening. You can see week 32, August 10th, it's going up through September 21st. We are now at 17,609 on the active listing count. Now, typically, you can see the seasonality of this, right? In 2023, it also went up and it peaks around November 18th, mid-November. It peaked here October 22nd in 2022. And then it peaked in October 17th in 2020. So at some point, this should curtail, and hopefully demand stays fairly steady because it's getting cooler here and more people are interested in the desert when it's cooler. And therefore, things seem like they are propped up or at least getting better. And that's what we're hoping for in 2024 towards the end of the year in Q4. Because right now we can see that the trend that typically in October, maybe as late as November, inventory going up peaks, but yet demand continues to stay at least flat, if not strong. We hope. Okay. That's the idea going into Q4. Now, contract ratios, these are the number of contracts happening, right? The ratio. And you can see right here that it's going about steady. So last week was 6720 under contract, and we have 6822 under contract. So the number of pending contracts in the Phoenix area went up over the past week. This is good. Okay. This is good. From week 36, they're at 6493. 2 weeks ago, 6720, and now 6822. So the last 2 weeks, the pending contracts have gone up. So that means more buyer demand. This is good. I think the rates are going to unlock some of this inventory. Okay. So this is very important to pay attention to. And then last but not least, some commentary about mid-September here, I think is fairly interesting. Nothing off the wall here, but I think this is good to give you a perspective on where we're going. I said the previous 3 months, May, June, July, were abnormally weak for sales prices, following an unusually strong April. We now have another abnormally strong month in August, which is good because August is usually really, really slow, to get us back into the mid 290s on a price per square foot basis. We believe there might be a slight fall over the next month, okay, in September, but prices have been so volatile over the summer that it would be nice if we can get a little more stability and direction. The next month is not all set in concrete whatsoever. So we'll see what remains to be had. Now, what this mean for you if you're looking to buy a house, guys? I think that there's still a good opportunity here because you can see that although demand's gone up a little bit with prices, with contracts going up, it's not like everyone just jumped in and it's just you're gonna have multiple offers on properties. Not happening now in some areas of town. You're gonna have multiple offers. We've seen that personally in some of the properties that we're marketing, but they got to be priced well and in a high demand area. And let's face it, guys, it's very micro niched when it comes to communities or even zip codes for areas around Phoenix. So if you are looking at a certain area, these are all the metrics that your agent should be reviewing for you when you're getting ready to make an offer on a property that you like. And you still have negotiating room. That's the good news. Okay. You do. Mortgage rate buy downs, guys. I think that's the best way to approach this situation right now. That if you can get, because guys, here's the deal. I'm going to talk about a couple articles right here that talk about prices probably not going down with rates coming down. Prices not coming down with rates coming down. Prices probably will go up. In fact, you don't believe me? Here's a couple articles I'm going to show you here in a second. But the reality is right now, before all that potentially does happen, you still have this window of time where if you wanted to purchase a house, you can do so with all the leverage, a lot of leverage still on your side. Contract ratio, CMI is going down. Excuse me, not contract ratio, CMI is going down, okay, because of supply and demand not going in opposite directions, okay? Well, I should say they are to a degree because supply is getting higher and demand's actually staying fairly equal. Okay. But you have the leverage. That's the point. Now I'm going to share my screen and talk to you about this article right here. Okay. Because this article says here are 4 ways the Federal Reserve's big rate cut could change the housing market. Here are 4 ways. All right. Now, mortgage rates may not actually drop much further right now. That's what their first prediction is. Okay. This is from NPR here. But the prospect of rate cuts have already helped send mortgage rates lower even before the Fed announced its actual decision on Wednesday. We talked about that. But here's what's interesting, okay? Lower mortgage rates could actually mean higher housing prices. Oh boy, is that what we really need right now? No, we don't need that, but it's probably going to happen. Here's the thing. Lower mortgage rates may not actually make it easier to buy a home. In fact, it can make it more difficult to and lead to higher home prices. That's because lower mortgages are likely to lure more buyers back to the market, bringing in competition for a limited supply of houses. That's tough for first-time home buyers. Okay. And that's what this agent in Denver is saying, another agent somewhere else in Ohio. But these buyers have struggled to find their first home as many were scared off by bidding wars during the low interest rate era and then were rebuffed by high mortgage rates and still high prices. But that's probably going to continue. So, what is the solution? The solution is a lack of supply of housing. And so we need to build more houses. However, that is not going to happen overnight. Supply is not kept apace with demand, especially in the large millennial generation is forming households and trying to buy homes. Okay. So affordability will still be a problem. Now, right now, they're saying that there are about 7 million, I believe, home units short of being somewhat balanced. We are that far undersupplied across America. In other words, it will take more than the Fed's rate cut to fix America's housing problems because you need more supply. So, again, with 16,000 some properties on the market here in Phoenix, you think the supply is just fine, and it's not bad. But we need more long term. Okay. We need more long term. And that's just not Phoenix. That is everywhere across America. And again, this talks about these articles here from the Phoenix Business Journal talk about half America's rental households considered cost burden. Okay. We talk about Christmas for real estate, which commercial real estate sectors will benefit most from interest rate cuts. This is the larger sector now we're talking about because you have that and you have businesses being affected by interest rates. Okay. And this is good. But it's not the silver bullet. Okay. People are anxious to get capital flowing again. They want more capital flowing for their business loans. And of course, on the commercial real estate side, all these multifamily unit apartment complexes need lower rates to be able to hopefully stay afloat and solvent so they don't go into foreclosure, which will have a ripple effect on the economy. So this is all good stuff. These articles go on to talk about, and I think it's not rocket science at all to understand why that is. Okay. So you have that going on. Now, with Yahoo Finance, they always have some good stuff in the housing market. Okay. But they had a couple good articles here that I want to talk to you about because data shows the U.S. economy pacing for healthy growth, but new headwinds loom. What are those headwinds? Okay. The headwinds are lack of supply. The headwinds are inflation, albeit it's coming down. What they're worried about with inflation being somewhat low and somewhat under control, the labor market still is not showing signs of improvement. So it's going the wrong direction, the unemployment rate, et cetera. Okay. So these are interesting times in which we are finding ourselves on a macroeconomic situation. Another article here, America's home affordability crisis has a solution. Lower rates isn't it. Okay. And again, they talk about the cut on rates, and they talk about how both campaigns with Trump and Harris, okay, right here, are also talking about housing supply, and for good reason, because there aren't enough homes to keep up with the demand. There you go. There you have it. Okay. The shortage of homes has helped propel home prices to record highs. That is the main reason why home prices are at all-time highs. Okay. And then this guy says, I'm really encouraged by how much priority the campaigns have put on housing because it's necessary to occur. Okay. So this is what this article continues to move forward. And guys, this is what we need to have happen. So now we're going to jump into a couple of things on development here in the local Phoenix area. But I want to set the stage here for the future conversations we're going to have over the next several weeks as we move into quarter four, eventually here in the economic cycle of the year, because I think quarter four could be pretty good for Phoenix. But it just depends because a lot of people are waiting for the election to occur in November. And I think no matter who gets in office, you're going to have a lot of demand that is pent up, not supply, but demand that is pent up, looking to jump into the housing market in Phoenix. I can't speak for the rest of the country, but I know that exists here in Phoenix based on all the economic data indicators. Okay. But what do you think? Comment below. Let us know what your comments are on this situation. We would love what good, bad, and different. Do you agree? Do you not agree? I would love to know what you think about the situation, guys. Am I just another one of these YouTube talking heads that is just trying to have my own agenda and therefore get people to act? Is that what you think? I hope not. I hope you're seeing this is impartial and this is bringing the most data from all kinds of sources, from CNN to Yahoo Finance to NPR to the Phoenix Business Journal to the Crawford Report and so on and so forth, talking about the issue at hand, giving the different perspectives, but primarily based on the data. How many millions of housing units are we short in America? Well, 7 million is a lot, and the solution is not going to happen overnight. We need a plan to continue to help developers and incentivize developers to build houses to help get prices to come down, because when there's a lot of competition in the marketplace, prices will start to settle back down. Right now, it's not happening because there's a shortage. Okay. So that's just where we stand, and that's economics 101. Now, let me share my screen and go back to some development stuff here because this is good stuff as well. All right. So we talked about a couple of things that have to do with the rate cuts. Let's go with some development things, because right now, what's happening in Phoenix? Are there still things happening? Are people still investing in Phoenix? Because if big companies are investing in Phoenix, that has a trickle down effect to jobs and money being poured into the economy locally, which will support housing and jobs and make our economy very, very robust leading into the future. Well, you got one here. Shea Homes buys parcel of land for former Valley Dairy Farm. Nearly almost 1,000 homes planned to be built right here. It's already purchased. The deal was done for like 26 million or so. And Shea Homes, which is a very reputable builder, will start building this out in the West Valley at the corner of 75th Avenue and Jomax Road in Peoria. So that is coming down the pipe. That's one northeast, but the main this community right here, excuse me, is at 75th Avenue and Northern. Okay, that's where this one is. Okay, so homes are being built. Builders are buying big parcels of land, betting on the future of Arizona. This is good. We need a supply. Okay. But Chandler, now switching from the West Valley to the East Valley, guys, if you are more of an East Valley person, this is great news too, because Chandler's district downtown project moves ahead after commission approval. There's a rendering of the conceptual rendering of what's going to be happening out here. But guys, this is a big parcel of land. This is, I want to say, about 20 some. How many acres is this? This is big parcel of land, and this is going to make the downtown district of Chandler really, really cool. It's already pretty special. It's pretty quaint, pretty cool. This will make it even better, okay, with all these economic development here happening right there in the Chandler area, okay? So it's 45 acres. That's what it is on southwest corner of Pecos Road and Arizona Avenue. All right. Next but not least, Chicago Restaurant Group to open 2 eateries in Phoenix Esplanade, guys. That is down by the Biltmore, okay, I believe, and Biltmore's neighborhood on the Camelback Road. Okay. And 2, hey guys, anytime cuisine's coming from Chicago, it's usually a pretty good thing, usually never a bad thing, because obviously Chicago is known for really good food and cuisine throughout the city. So if we get a flair of Chicago down here for the cuisine side of things, then that's just going to help Phoenix's food scene out tremendously. Okay. But they're coming down, and they are going to be a big factor in the Biltmore area. Okay. And then, guys, is it too early to start talking about the Phoenix Open? I don't think so. It's never too early to talk about the Phoenix Open, the PGA Tour event, and the greatest show on grass. But country star Jelly Roll is headlining the Waste Management Phoenix Concert Series, which happens at the Bird's Nest and is phenomenal. Okay, more of an intimate setting, it's smaller, and it's just a phenomenal time. But Jelly Roll will headline the first night of the Bird's Nest concert around the WM or Waste Management Phoenix Open. This is him performing at the River Beat Music Festival in Tennessee this year. That's a big name, guys. And so that is really cool. So you're going to have Jelly Roll coming right here to Scottsdale, Arizona. And last but not least, speaking of Scottsdale, or you could probably say Paradise Valley, but football lovers and real estate combine right here. Arizona Cardinals rookie Marvin Harrison Jr. plunks down cash for the Valley home, guys. This is the Arizona Cardinals' first overall pick in the draft, and he just bought a home, and it's not a cheap one, right there at the Ritz-Carlton project where Paradise Valley collides with Scottsdale. He put down about $4.95 million in cash for a 4,500 square foot home right there in that development, which is a beautiful area, guys. This development right here for the Ritz-Carlton project is incredible. The Palmera Shops, the Ritz-Carlton, the Fendi project is coming there, guys. This is awesome. But Shea Homes built this home earlier this year, and the project is called Azure, and it's a private guard gated enclave right next to the Ritz-Carlton project, which is a $1 billion project plus. Okay, so anyways, that's kind of cool news, guys, and it's maybe kind of bad for Marvin Harrison because I don't know, he probably wants some privacy, but now everyone knows where he lives, at least the general vicinity. So I guess if you want his autograph, just kidding. Leave the man alone. Let him do his football thing. But it's kind of cool that he's purchasing right there. It's a great project, guys. We've sold some properties in that area. So if you have any questions about that real estate or any of the real estate from the Shea Home project in the West Valley down to the Chandler District downtown area project and all the real estate surrounding both areas and in between, call us at 480-660-5974. We've been selling real estate for 19 years right here in the Valley, and we are everything Phoenix. So, guys, thank you so much for your time. Comment below. Let us know what you think of the situation and where do you think the housing market is going to go with rates and the 50 basis point cut the Fed did last week. Comment below. Let us know. Thank you guys for listening. I really appreciate you. And until next time, until next week, same time, 12:30 here, a local time. Keep it classy, Phoenix.